Imagine markets where every asset is trapped in freezing silence, where liquidity has vanished like a ghost at dusk, leaving investors paralyzed, desperate for motion, for breath, for chance. That's not some distant nightmare. It's the world edging closer with every tick, crawling into portfolios like a shadow you can't outrun. For hedge funds, for investors who thrive on movement, on seizing opportunities before they vanish, this suffocating void of zero liquidity is more than a challenge. It's a brutal test of survival. No drills, no simulations, no quick fixes can prepare you fully for a market where buying or selling turns into impossible acts, locked behind invisible walls, where every trade threatens to ripple into chaos or silence. The pain is real. It's the tightening chest, the sleepless nights, the gut-wrenching fear that decisions made in split seconds now feel like throwing dice into an abyss. The old playbooks? They flop like worn-out maps in a storm. Those quick exit strategies or tactical repositioning won't get you out clean anymore. The clock ticks, liquidity drains, and the market's heartbeat slows to a painful stop. But here's what you need to know right now. Domination in a zero liquidity world doesn't come from luck. It doesn't come from brace and pray tactics. It springs from radical transformation of your mindset, strategy, alliances. Domination demands ruthless adaptability and a refusal to be trapped inside the old cages that have held the industry hostage for decades. This is your call to break free from the myths of market always moves and to stare down the freezing abyss with raw, calculated will. First, ignore the noise telling you to panic or freeze. The paralysis most feel now is the silent killer. What you must do instead is strip your portfolio down to its core essence. Liquidity dries up unevenly. It doesn't kill all parts equally. Your edge doesn't hide in the crowded stocks or the obvious plays everyone chases. It helps to recognize which assets become structural traps and which transform into unseen choke points or weird oases of liquidity for those who dare to dig deeper. This requires more than surface-level research. This demands hyper-focus on the microstructures of every market you touch, the hidden order books, the bid-ask spreads widening like canyons, the rarely scrutinized blocks where liquidity silently pulses. You cannot accept passive, not any longer. Active is life or death. This means jumping on micro-inefficiencies others can't or won't see, leveraging latent liquidity pockets invisibly embedded in markets that are superficially locked. It's about ruthless precision. Enter and exit in fractions of a second, ramping up transparency in an opaque world, and building algorithms engineered to detect and exploit liquidity sinks before they freeze out everyone else. If you lack the capability, build it fast. Partner relentlessly. The collaboration between data scientists, quants, and gut-driven traders is where survival morphs into domination. Next, the secret weapon is networked intelligence. In a dead market, you don't just need data. You need insight from connections built beyond the obvious, beyond borders. This means brutally selective collaboration with peers who share your fire, your refusal to bow to illiquidity's chokehold. A closed system filled with noise and mimicry? That's death. But a lean, encrypted network where raw intelligence, risk models, and real-time flow data are shared horizontally among a few rare minds, that's the lifeline you can build to stretch liquidity. This is not socializing, it's war room alliance building. Outsource no control, own transparency, expand selectively. Invest heavily in alternative sources of liquidity. They might look obscure, untested, risky, but in a world thirsting for fluidity, these outliers become your oases. Venture into illiquid credit packages, private placements with multiple exit layering, reinsurance-linked securities, or hedge fund strategies that create secondary market liquidity artificially via cross-asset swaps. Yes, it's complicated. Yes, it's outside the comfort zone. But pushing into these hidden layers is exactly what sharp investors will do when the traditional markets feel like quicksand. Your risk models must evolve. What worked in a liquid, noisy market now glorifies stagnation and blind spots. Transitioning to stress testing for zero liquidity shocks unveils new correlations, hidden feedback loops, and explosive systemic threats hiding beneath normal volatility. Layer scenario analysis with behavioral data. Understand not just market mechanics, but psychology. The panic triggers, forced deleveraging cascades, the brutal domino effect triggered by tiny moves amplified when no buyers show up. Anticipate not just price drops, but liquidity evaporations themselves. Understand that this is not a phase to endure, but an opportunity to dominate by embracing patience and discipline. When the world scrambles to exit, you must be the rare player who knows when to stay still, when to accumulate deliberately during brief liquidity windows or patented squeeze moments. Your willpower becomes a weapon. The market mocks haste, it punishes impulsiveness. When liquidity freezes, boldness is found in the cold hold, not the frantic trade. Liquidity drought throws noise traders, algorithmic flocks, and herd mentality all into chaos. This chaos is your canvas to paint on, a place where informed, disciplined actions lead to outsized alpha. This is not luck. This is craft honed in the furnace of crisis. It's the art of being present, alert, prepared when liquidity thaws briefly, squeezing victory out of moments others miss or ignore because panic destroys focus. Technology is your ally if wielded with clarity and control. AI models must be retooled, focused not on predicting price, but on illuminating structural fragility, mapping moment-to-moment liquidity flows, and flagging distortion points instantaneously. The best funds will exploit dark pools, fragmentation across markets, and latency arbitrage with surgical precision. But tech without human judgment is blind. Rigid algorithms that lack context will drown in frozen markets. The future belongs to those who combine machine speed with relentless critical thinking and gut-driven skepticism. But what about the human factor? The emotional bloodletting when markets freeze is brutal. Panic breeds mistakes, and loneliness in times of crisis kills morale. Hedge fund leaders must forge cultures of resilience, built on ruthless honesty, where fear is confronted, weakness is exposed, and calm, methodical action becomes a creed. Investors are hungry for leaders who face the cold, brutal truth, not excuses or false comforts. This magnetic mental toughness, and a shared belief in mastery amid chaos, separates those who dominate from those who are swallowed by the freeze. Ask yourself this: are you building a fortress designed for calm seas or one forged for storms? The liquidity drought is not temporary. It is a seismic shift that demands a new infrastructure, new ways of thinking, new alliances, new kinds of agility. The dominant funds will be those who reject comfort, who refuse the half measures, who invent new markets amid the ruins of the old. This might mean participation in liquid alternatives that anchor the illiquid, synthetic exposures to borrow unseen flows, or novel capital pooling arrangements that turn isolation into collective strength. Radical? Yes. Necessary? Absolutely. Every second spent doubting or replicating tired strategies is a second lost in the freeze. Your role is to sharpen, to reforge, to become indispensable in a world that learned to freeze fast. The stakes are colossal, because liquidity is freedom, and with freedom strangled, fortunes are lost, reputations burned, future power extinguished. But for those who understand the laws of this frozen realm, for the few who refuse to only survive but demand to dominate, liquidity drought is the cruelest teacher and the fiercest battleground for the future's real rulers. So, look into the mirror of this new world and ask, will the coming age see hedge funds reduced to ghosts, frozen by indecision? Or will it be the era when the rare few rise, adapt, and rewrite the rules, building lifelines where others see only dead ends? The choice is raw, urgent, and only for those bold enough to own it. This is not about waiting for liquidity to return. It's about mastering the market when liquidity has fled. This is where the future is forged. Will you be the fire or the frozen silence? The world is watching, and it remembers those who dominate when all else falls still.